Hello smart investors, I hope you're doing good. My name is Gabriel Jarrison, I'm from beautiful Paris, France. Today I'm going to talk to you about SimpleShowing, currently raising money on Republic. I'm going to discuss this investment opportunity with you and tell you my opinion should you invest or not. Before we start, if it is your first time here, I'd like to invite you to subscribe to my channel with the subscribe button right below this video, to join the community of the smart investors and to not miss any of the video that I do, any analysis, and to become a smarter investor. Let's go. All right, here I am on Republic's website. I'm on the SimpleShowing page. We're going to look at that together. I'm also here with my investment criteria. It's a list of 8 things that I look for an investment. So if you do not know about those criteria, before you look at the video, before you watch the video, please download just below the document where I explain what they mean. It's a few pages only. You can read it before you watch the video. You can pause the video and go read the document. It will allow you to understand much better what I'm talking about here. It's completely free. You just have to click on the button below to read the criteria. All right. And that being said, let's start. I wanted to remind you before we start, this is not financial advice. I'm not your financial advisor. Please make your own research and take your own decisions. All right. So I've just watched the short video here. I haven't made a deep dive into the company because I want to put myself in the same shoes as you when we're looking at companies here. All right. So SimpleShowing basically is an app that is helping you look for houses to buy a new house, and it's allowing you to book your own home visits. All right. So online real estate startup disrupting the traditional real estate brokerage model by making it easier and more affordable to view and buy a home. Basically, they started from a fact that is interesting, that 60% of users who book a home tour buy a home through SimpleShowing. No, that's not the one that they started with. They started with most of the people find the house on their own. All right, I thought they would start from this because they start from this on the video. Sorry. So basically, most of the people find their own houses now online, but they want to visit the house. So you can actually book your own tour on the house, and 67% of users who've booked that tour end up buying the house through SimpleShowing. That's the thing. All right. So they have revenue and growth. They have a lot of monetization opportunities. So they're raising on an $8 million valuation cap with a 20% discount on a crowd save. The minimum is $100. You can invest on republic.co. All right. So what do we know from that model? First of all, they do have traction. It says here they have a 15% month-over-month growth. That is a great growth, and it's still the beginning, but it's great. It has perfect scalability because it's not a hardware product. It's completely software. It's an app, and it's very easy for them to open new cities. Right now, they're on the East Coast, mainly in Atlanta, in Miami, Tampa, Orlando, Nashville, Miami, Washington, D.C., and Charlotte, Raleigh. So it's very easy for them to open new cities in the US and abroad, etc., etc. All right. The market, of course, is huge. The market of home buying, it's not going to slow down at all, so there's no problem there. The valuation is pretty good, $8 million for a startup with such traction. I think it's great. They have 80 grand per month of revenue, and of course it's growing very rapidly. So yeah, I think it's good, and they have a lot of monetization opportunities with insurance, mortgage. They're going to have partnerships with smart locks to allow people to visit the house even when the homeowner is not here. So there's a lot of potential. I think the valuation is pretty good, pretty fair. Let's talk about the team, the margin, the monetization, and the margins. So how do they make money? They do know how to make money, of course. Basically, they take a fee on the purchase, and actually they give half of the fee back to the owner of the home. So basically, they get a 3% commission. So on a $400,000 house, it would be 12 grand. So they're gonna give $6,000 back as a refund for you, based on the number of showing booked through the app, and they're gonna keep $6,000 fees. So it's a typical margin, small margin on a huge amount of transactions, but it's actually not that small. It's a $6,000 transaction. It's actually a high margin on a big number of transactions. So I'm going to say that the margin is pretty good. It's basically 100% margin. Basically, once you have the app, I'm also looking at the percentage. So once you get the app, you have to pay the servers, you have to pay the developers, but each additional house sold doesn't cost you anything more. So on the $6,000, you make it basically 100% margin. So that's pretty good. All right, so that's great. Then this is how they make money, monetization and margins. So it looks like an all-star. Let's see about the unfair advantage and the team, but it looks pretty good so far. So they have 18% month-over-month growth in the last year, 67% of the milestones, the channel revenue, the expansion, the real estate tech evolution, the press, the customers, the revenue sources, customer acquisition cost. All right, so this is a big thing for them. Basically, the revenue per transaction is $4,700, and they have $900 of operating costs, $300 of lost deals, and $1,000. So this is the price of customer acquisition, $1,400. It's pretty high, but it still allows them to make a $2,000 margin. So it's actually not 100%. It's more like 50%, but it's still pretty good. And this might decrease potentially if they get more visibility, more press, more stuff like that. So, I mean, let's see. Yeah, it's not bad. They expect, the customer acquisition cost is actually going down. That's what I thought, because they're getting better and better at it. And the actually transaction value is getting higher. And they have a lot of potential upsells with the insurance and stuff like that. The real estate tech, of course, is interesting to a lot of people. Let's see about the competition. So the competition charges 5-6%. All right, so these companies make the vast majority of the residential real estate transactions, but there's also a lot of those companies here. What's different? You have hybrid agents, you have iOS and Android apps. Yeah, that's not a big... Okay, so, and they raised $50K to date with launch, 500 startups, velocity, and shipped. So they forecast a big growth in the revenue. Obviously, I'm going to say that there's no huge unfair advantage. Basically, they built an app and they pay very expensive for their customer acquisition. So it means that, well, they have to pay for the customers, and the customers are not going to SimpleShowing because of their unique proposition or their unique unfair advantage that they could have. So I'm not sure they have a real unfair advantage. Basically, they have an app that works and they pay for customers. They're able to make money, which is great, but that's not enough for me as an unfair advantage. So that's going to be the red dot here. Let's look at the founders. We have Fred McGill, MBA from Georgia Tech, Fortune 500 company, Salesforce, Johnson & Johnson, was VP Marketing Employee number 17 at Redox, health tech startup before SimpleShowing. He built sales marketing, okay. MBA from University of Florida, 50 plus years of experience to SimpleShowing, real estate license, director of sales. Okay, so those are the two co-founders. I guess let's go see their LinkedIn profile if we can. So I'm trying to see if they have previous entrepreneurship experience. It seems like they don't. And are they complementary? Yeah, are they completing each other? Official member, contributor Forbes Real Estate Council. That's pretty good. VP market. So he's, senior account executive. So he's more of the salesman. And so that's Fred. And Jeremy is more of the, I don't know. So no previous entrepreneurship experience and no real complementarity. So I'm going to say that the team is, it's not against you guys. I mean, I'm sure you're great and I'm sure you're very competent, but I don't see the complementarity. We have here the salesman, but we don't have, for instance, a real estate professional. He was on the health foundation, and so no, what did I say? Well, no real estate experience and no entrepreneurship experience. All right, so not bad, but not perfect. And that's it for the look at the SimpleShowing. So as usual, if you want to know if I'm investing personally in SimpleShowing and don't get fooled by the two red dots here, I might invest. And even if it's all green, I might not invest. So if you want to know if I'm investing or not, you're more than welcome to join the private investment club The link is in the description. In that club, I will tell you my decision on all of the websites that I look for. It's on Republic and on other websites, Cedars.com for instance. I will tell you every time that I invest and that I don't invest, and for which reasons. I will tell you if I'm investing in SimpleShowing or not and why. And I will tell you where I'm investing my own money so you can imitate my deals and have great returns as I have. If that's of any interest to you, you're more than welcome to join. The link is in the description. With that being said, thank you for watching. If you enjoyed the video, please give it a like, subscribe to my channel, and share the video. Subscribe to the channel to get all my latest videos. Thank you for watching until the end, and I will see you soon. Bye.